Will they or won't they? India is once again plunged into uncertainty about the legality of crypto. Welcome to the Daily Forkast, February 16th, 2022. I'm Angie Lau, Editor-in-Chief of Forkast, covering all things blockchain. Well, when the Indian government announced a tax on crypto earnings earlier this month, a lot of people expected that maybe this could be the path towards adoption, but banks remain cautious. So what's going on? We're going to take a look at what's holding them back and a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's take a look at what's been happening around the Asia-Pacific region today. First up, Russia. It has suggested giving the green light to crypto mining in certain regions. The Ministry of Economic Development, according to reports, has proposed allowing mining in specific regions which have a steady surplus in electricity generation. The ministry also suggested introducing taxes for profits realized on cryptocurrencies earned through mining. Now, the Bank of Russia had proposed a comprehensive ban on crypto-related activities last month, but the country's central government agencies have since reached an agreement to regulate crypto, with a draft law expected by Friday. Meanwhile, Pakistan's state bank governor has echoed the Reserve Bank of India's concerns over crypto. Reza Bakir says that while digital currencies do offer the potential to democratize finance, they're a risk to financial stability in developing countries like Pakistan.
We have come up with the view that such virtual currencies currently have more risks than benefits when evaluated against the core objectives of us as a central bank.
The state bank already recommended a ban on cryptocurrencies last month that saw one of the country's largest private banks, Bank Al-Falah, asking customers to avoid using it for crypto transactions. You can find those stories and more at forecast.news. And continuing on that theme, the Reserve Bank of India's ongoing anti-crypto stance has left banks there reluctant to offer their services to both crypto companies and investors. Forecast's Pradeepta Mukherjee from Calcutta, India, takes a look at how that's hurting crypto adoption.
The announcement of a 30% tax on crypto income in the Finance Ministry's budget earlier this month had spread hopes of crypto legalization in the country. And while Finance Minister Nirmala Sitharaman has said the government will work in complete harmony with the RBI on decisions including crypto, a lack of clarity from the central bank remains a key issue. Concerns were aggravated by the RBI's deputy governor calling for an outright ban earlier this week after comparing crypto to a Ponzi scheme. Local crypto exchange DeFi told Forkast that based on their experience, less than half of the banks in India are currently willing to provide crypto-related services. On conditions of anonymity, several Indian banks told Forkast they are waiting for guidelines from the RBI, with one expert telling us,
banks in India are controlled by a rigorous set of regulations set down by the Reserve Bank of India. RBI now has to issue a circular or directive instructing the banks on how to handle consumer queries relating to cryptocurrency transactions or purchases.
Gupta says he hopes that happens quickly as consumer demand for crypto is quite strong. But with government officials repeatedly clarifying that taxation isn't a move towards legalization, the banks remain in limbo. For Forecast, I am Pradeepta Mukherjee, Kolkata, India.
GameFi tokens have been rising in line with the rest of the market of late, but will it continue? Or will it be game over for those who have been banking on the play-to-earn model for their livelihood? Duke Liu, Executive Chairman of Spores Network, a cross-chain DeFi-powered NFT marketplace, is the man with all the answers. Good seeing you again, Duke.
Good seeing you guys.
All right, GameFi. Are you in GameFi? Obviously, you're in
Sure.
GameFi. But GameFi, though, for the rest of the gang, combines blockchain tech with DeFi, allowing players to earn incentives. Okay, we know this. But last year, we saw the rise of Axie Infinity, and then we saw it kind of like peter out a little bit. Do you see more breakout projects in store for 2022?
Yeah, I think what's happening to games like Axie Infinity is obviously the mechanics behind play to earn still need a bit of tweaking. There is definitely deflationary pressure, as there should be with all games, whether Web 2 or Web 3, that have an earn component. Because once you have an earn component, then your gameplay is much more serious, right? It's aggressive, it's tactical, it's out there to earn money, and therefore it's naturally competitive. So we see that the future of play to earn is still strong. We think that play to win will become much more into play as well. In other words, you're playing to win, you're enjoying the game, as well as you're earning a little bit on top.
And that's really the dynamic that's shifting a little bit, which is a nuance that the industry is identifying, and then they're kind of evolving the space. I mean, gaming is such an engaging experience, and with play to earn and metaverse coming in, do you think user experience is going to be a lot more magnified here?
The gaming experience has got to be fun, whatever generation you belong to. So I think with Web3, let's call it the last 2 years, we've had iterations of games that really are 8-bit, 16-bit. So we're going back to the early 80s, right? Which was fun, not too bad, right? But now we got to grow up a bit, right? And so I think there's another round of far more entertaining games, far more engaging games, far better graphics. That's not to say that things like voxel-based engines aren't going to be popular. There's a space for them, but at the same time, we think that 3D is coming, right? And AR, VR as a promise will become a reality in the next 12 to 18 months, as a lot of the projects that raised in the last couple quarters will start to, really either fail to meet their promises, right, or actually succeed because they are actually strong teams.
I mean, to your point, old school is the new school again. You got video game pioneer Atari has created giftable NFTs, or GFTs, that are gift wrap boxes containing NFTs based on Atari's history. So, a nod back to nostalgia here. And that's kind of an interesting way for legacy gaming companies to connect with the digital age. It's all kind of like coming to a head.
I think as it pertains to Atari or similar, as you said, legacy type game studios, I think there's actually an interesting possibility for them, which is, in fact, they are legacy, meaning that they aren't as relevant in Web 2 as they once were. So they then have an opportunity to take a lot more risks than the current winners in the Web 2 race. When you look at something like League of Legends, then are they going to make a strong move to the NFT world and break their game economics, or adjust their game economics? Probably not. Whereas Atari says, hey, I have a library. I'd love to monetize that library in another fashion. So Atari, I think, is what it did was expected, correct move for them. The question is Web3 going to rely on legacy firms making bold moves, or is Web3 going to invest and build out its own game studios that are play to earn and play to win?
It's exciting space. You could argue that, or you could argue that Web 2 is going to bring a new audience into Web 3 by simply engaging a different type of audience and introducing them via technology. But this is what makes this space super interesting. And as usual, Duke Liu, thanks for explaining it to us. Executive Chairman, Sports Network. Always good to see you. And that's the Daily Forecast from our vantage point right here in Asia. And we truly appreciate you joining us right here on YouTube. And if you haven't subscribed already, please do hit that alert button, hit like, and do share. We always appreciate it. I'm Editor-in-Chief Angie Lau. Until the next time.